and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today. Welcome to the closing hour of trade, and here we will wrap up the day's trade for you towards the last half an hour. What is the action really looking like in terms of the markets? That's what we will focus on, and we will do a lot of discussion with an expert who will help us understand what do the markets really look like from here on and what should be your investment strategy. But first up, a quick check of how the markets are doing at 3:05 p.m. Right here, 61,781. That's the level for the Sensex right here. It's up by 440 odd points at the day's high level, so 0.7% of an uptick. We've seen a bounce from the day's low too. 18,400 reclaimed on the Nifty, 140 points up, so a sharp gain on both the benchmarks, the Nifty and the Sensex. Talk about the broader markets, right, and see how they are doing as well in trade. So both the mid cap and the small cap 100 index, both of them in fact up by half odd percent in today's action. So it's the broad-based rally that you've been witnessing in the markets today. In terms of the sectors, only one culprit, and that is the IT sector, that's down by half odd percent. Rest of the sectors are all up in the green, led by sharp gains coming in from the auto pack, that's in the top gear today. 1.5% uptick for that one. The realty space up by 0.8%. Gains coming in also on the FMCG pack, that's also rallying at the highest point of the day, 1.4% odd right there. So autos, FMCG, realty clearly leading the pack in today's trading action. The metals are back in action too. Brighter, they're shining at this point in time, 0.4% of an uptick for that one too. In fact, 1% up now for the metal space. Don't lose sight of the kind of move that you're seeing in the metals pack. A very sharp move in the last 15-20 minutes of trade as well. Very sharp and smart move that you're seeing on that one. The farmer is back in the green, slight pullbacks coming in over there. PSU banks, private banks back up into the green as well. Financial services also seeing gains of 0.8%. So it's a broad-based rally. Everybody coming together to really pull the markets higher towards the closing of the session, barring the IT sector. The top stocks in move today. The top Nifty 50 gainers in today's trading action include the likes of Eicher Motors and M&M from the auto pack. Apart from this, it's the Adani Port stock that's up by 3.5%. 890 rupees is what it is trading at. Power Grid moves higher, 2.5% up move for that one. Bajaj Finserv also seeing gains of over 2.2% up in trade. On the losing side, no surprises for guessing. It is the top bellwether IT names that are dragging the sentiments. TCS, Infosys, all of them down in trade. Apart from this, you're also seeing Sun Pharma because of its individual news flow. That's seeing a cut of 0.7% odd. ONGC, the oil and gas space, has been taking slightly slow muted trend in today's trading action. And Tata Motors about 0.4% down in the red. Let's welcome our guest for the day. Avinnash Gorakshakar, Director Research at ProfitMart Securities, joins in with his take on the markets. Welcome, Mr. Gorakshakar. Thank you so much for taking the time out for this discussion. First up, a very smart move towards the end of the session, and that's what we've been constantly seeing, last couple of days, trading sessions. Is the 3 p.m. move that really takes the markets into either direction. Your thoughts of how to really read this kind of a momentum, because it's very difficult on an everyday basis to really figure out if this momentum can sustain going forward.
Yeah, I think, Sakshi, you have a very valid point. I think markets definitely, normally take a big bounce after the 2:30 trading time. And I think this time it's different considering the fact that barring IT, all the other sectors have done significantly well. My thinking is that the markets are now possibly looking at the fact that most of the interest rate hikes and obviously the global macro, headwinds have been more or less been digested by the markets. Markets are now expecting some further news flows, in the new year. Hopefully, what kind of flows could come in the equity markets, especially emerging markets like India. And I think the coming budget is also going to be a very top event, which I think a lot of people are expecting. So I think, metals, as you rightly said today, have been shining because China has made some announcements saying that the economy is going to be opened up. They want industries to, come, to China and set up, infrastructure there. Most importantly, if this happens, then metals definitely as a pack could see a significant amount of re-rating, considering the fact that metal prices would definitely bounce back. China is a very large buyer in the metal market. So I think broadly, I think people are optimistic. I would believe that, now going forward, the next hurdle for the market would be obviously 18,700, 18,800 odd levels. If that is taken out, then I think we could see a further upside. But till then, I think the markets would remain, positive, at least in a very close range.
And how do you read the markets in terms of valuations and macros at this point?
Yeah, I think valuations on a broader level definitely seem to be, slightly pricey. I think if you look at the large caps, I think obviously prices have moved up quite significantly. On the broader mid cap, small cap segments, there are many companies, there are many companies which are available at decent, attractive valuations. I think one has to take a stock specific call. Broader market definitely is there. People are looking at good, interesting companies from the auto component side, from the capital goods side, from the cement sector side, which are all promising sectors and which have not participated entirely in this rally. So I think it's going
Yeah.
to be stock specific, Sakshi.
Absolutely, you pointed out right, and I'm going to be speaking about some of those sectors that you just mentioned as well. Let's start off with the auto pack. That space has been buzzing and in top gear today. What is really fueling fire in some of these top stocks like Eicher Motors, M&M that have been in momentum for the last few trading sessions? And is this a space to be, putting serious efforts and money into at this point now?
Yeah, I think as far as Mahindra or Eicher Motors are concerned, I think both of them operate in sectors which are experiencing very strong growth. Commercial vehicle sales are up by almost 20-25%, and that is clearly visible from the volume data shown by Tata Motors, Ashok Leyland, Eicher Motors. As far as M&M is concerned, I think an additional booster has come in from the fact that there have been some news reports saying that tractor demand is going to increase significantly. We could see
Yeah.
unit sales of almost 9 lakh units per annum. And I think if that happens, that clearly shows, Sakshi, that rural demand is picking up after a long time. And obviously, that is going to be a very major driver for a company like M&M. So I think, you could see a lot of news flows coming in. And hopefully, if all this materializes in actual numbers, then I think you could see a good amount of re-rating in M&M as well as in Eicher Motors.
Okay, but then there's this one pocket that has been extremely terrible to look at and underperformed to a large extent in 2022, and that's left IT stocks as the worst performers on the Dalal Street. Now, things are not looking bright even now as we step into the new year. We're just about 15 days, 10, 15, 12 days of, away from that new year too. As the US tech major now, Accenture is now signaling a slowdown in the client spends, in the discretionary spend, and also has not increased its FY23 revenue guidance. HCL Tech was the previous one to do that too. Is that an ominous sign for the Indian IT sector at all?
Yeah, I think one thing is very clear, Sakshi, that it's going to be a very long winter for most of the IT companies here. And I think my sense is that looking at the kind of headwinds, from US and Europe, I would not be surprised that at least for the next 1 or 2 quarters, the challenges are definitely going to be significantly large. In fact, my sense is that only after June, possibly we could see some kind of, green shoots for the IT sector. And till that time, these companies would just remain, lackluster. In fact, the most important element is growth. I think growth is missing, and despite the fact that these companies are cash rich, they've got a lot of potential to give good dividends, buybacks. I think the market would definitely wait for that growth green shoot to come in, and that probably would take some time till June. So till that time, I think even if you find stocks to be attractive, it's better to wait for at least the March quarter and then see the commentary, see the order book position, because you
Yeah.
could definitely see a lot of lull here.
Right. Apart from the auto pack, what else is moving today is the FMCG space. Help me understand your thoughts and your view on the entire sector. And could there be any kind of a risk when it comes to the FMCG sector? Could it be the overall valuations metric, the inflationary concerns? Would you be at all cautious of this sector at this point?
Yeah, I think one thing which is important, Sakshi, is most of the FMCG companies are branded plays. And I think historically, if you see valuations of all these FMCG companies, they've been on the higher side. So I think valuations will not be cheap. They will definitely be fair to expensive. But I think what the market is liking is that after a very long time, commodity prices have come off. Palm oil prices are down by almost 30 odd percent. Crude oil prices are also down from their top. And most
Hmm.
importantly, if rural demand picks up, then I think you could see, 8 to 10% volume growth, which is going to be the key driver for most of these FMCG companies. So I think, clearly stocks like Godrej Consumer or typically a Hindustan Lever, I think you could see a lot of volume growth in the next 2 quarters, which is, I think, keeping the markets, quite sentimentally happy about these stocks as of now.
Right. You did talk about the oil and gas space, the crude oil prices. Now, what we've also seen is that the government has slashed the windfall tax on crude. Do you have a take on the fundamentals here in the entire space?
Yeah, I think as far as oil prices are concerned and the OMC companies are concerned, I think we could see better numbers, from the Jan to March quarter, because to a large extent, most of the oil marketing companies, have got some decent inventory even as of now. So the December quarter may not all that be great. But typically, crude oil prices go down. That has a positive impact on the GRMs of almost all the oil marketing companies. So companies like HPCL, BPCL, IOC, I think definitely look attractive from a long-term point of view. Considering that auto and aviation, the biggest sectors where crude is consumed, I think that has shown significant growth. So I think it's a good time to accumulate and be a little contra on these companies, but definitely, probably, taking a slightly medium term view.
Okay, just wondering how convincing to you is this entire PSU banking uptick story, and whether the best may be behind us, because for those looking to invest right now, the run up has been quite sharp already.
I think exactly because PSU banks have jumped significantly, and I think these were the most undervalued and the most ignored kind of bets in the market. So I think one leg of the rally has happened. I think the leg of the rally could be seen possibly, after the third quarter, because typically October to March, Sakshi, is one of the best periods for the banking sector. And I think with a credit growth of almost 17-18%,
Hmm.
most of these banks are now doing very good business, both on the corporate and retail side. So I think somebody who wants to take a bet at these levels probably should wait for some time, and probably a buy on decline strategy would be better.
Okay, where do you also stand on when it comes to the capital goods space? I mean, would you be cherry picking an L&T within the entire space, or is it a blanket positive that you have? Because a lot of analysts that I've been speaking to have a very positive view on this entire capital goods space for the next year.
No, I think capital goods as a sector continues to be quite promising. I think obviously Larsen and Toubro is the frontline leader in this space. It's got a combination of infra, capital goods, defense. So I think L&T definitely, even at the current levels could give a decent risk reward. But I think there are many small interesting bets. Actually, like we visited a company called Action Construction, which is into the crane market.
Yeah.
The order book is roaring, and I think the management commentary is also positive. So I think you should also look at companies within the small and the mid cap target segment, and I think where order book and I think the earnings trajectory is going to be pretty strong. So I think you would basically get good amount of risk reward if you look at even these smaller companies.
Right, absolutely. Also, speaking about the primary market action now, Mr. Gorakshakar, two more IPOs, opening for subscription that will take the entire rally to the tally to 5 now in December. The first one is K FinTech IPO that's already open for subscription, although the first day subscription figures look a little tepid. And then there is this LN Electronics. Your thoughts here, if you're covering this space, or are you more positive on looking at the listings of Sula Vineyards and the like then?
No, I think, Sakshi, I think both these IPOs definitely have a very well-run business. I think KFin is the second largest player
Hmm.
after basically CAMS. So obviously it's like a duopoly market. So I think KFin definitely should do well. But I think the valuations look pretty expensive. So I would believe that, it's better to wait for the stock to get listed. And I think then one can take a call there. As far as Elson is concerned, I think it's a good business because they are into the EDM space. They supply a lot of their products to the ODM manufacturers. So there, I would believe, we could get a decent listing gain and a good medium term kind of upside there. And as far
Hmm.
as Sula Vineyard is concerned, I think, the listing price is going to be the key element. I think the stock was priced aggressively, but looking at the kind of monopoly business and the kind of margins in that market, probably one could expect a decent listing. And thereafter, of course, these companies have to deliver. I think what the market would obviously like is that growth continues. And obviously, if earnings growth continues, then you could see pretty good action here.
Absolutely. Also, Mr. Gorakshakar, you stay on with us. I'm just going to take a moment to speak to Tanya Aneja, my colleague, to understand which are the stocks that are actually in focus in today's trade, and the buzzing action. Where is that really being seen at this point? Tanya, take it away.
Absolutely, Sakshi. So, first of all, sugar stocks are on a roll, and according to a report, the government may consider increasing sugar export quota for the current 2022 to 2023 marketing year. After accessing the domestic production in January, so shares like Dalmia Bharat Sugar and Rajshi Sugar, Shakti Sugars, Sri Renuka, Dhampur, they were all up in the trade today. Then we have Raj Industries as well. Shares were up to the tune of 6% today after the government cut the GST rate on ethanol meant for blending to 5% from 18% earlier. Now, Raj Industries is a supplier of ethanol plants, so big positive for this counter as well. We have KEC International as well. The company has secured new orders worth 1,313 crore rupees across its various businesses. So this stock was also in focus. And we have L&T shares as well. The company has signed an agreement to divest its 51% stake in L&T Infrastructure Development Projects, now that is L&T IDPL, to Epic Concessions Private Limited. Glenmark Pharma shares, they were also trading in the green, and the company said that it has received final approval from the US FDA for its general capsules used to treat high blood pressure. Dilip Bilkon stock is on a roll again, and this is after getting flurry of orders. So on Thursday and Friday also, the company received 4 orders worth 6,167 crore rupees. So big positive for this counter as well. On the flip side, we have shares of PTC India. They were under pressure today. So according to some reports, public sector undertakings were looking to sell their stake in this company. So according to a report, Power Grid Corporation of India, PFC, NTPC, NHPC, they have decided to sell their stakes in this company after allegations of a lapse in corporate governance surfaced. Lastly, we have Sun Pharma as well. These shares were trading lower today after the firm said that its Halol Gujarat facility has received warning letter from US FDA regarding the inspection conducted between April and May this year. Back to you.
Okay. All right. Thanks a lot, Tanya, for that update. Mr. Gorakshakar, any of the spaces stocks discussed so far that are on your top radar as well? How are you looking at the sugar space, for example? That's sweetened today after that, government's indication of the increase in the export quota going forward from here. Could that mean a structurally positive change for the entire space? And from the space, are there any stocks that are on your top list?
Yeah, I think sugar sector definitely looks pretty promising, and I think if the export quota is increased, that definitely gives a better leeway for most of the domestic players. I think companies like Balrampur Chini, Dhampur Bio, or for that reason even Renuka Sugar, they should do well. I think obviously that would help them increase their top line. But I think even the ethanol GST cut would obviously give us kind of a sentimental boost for most of these companies. Although GST is a pass through, but I think looking at the kind of demand for ethanol, I think most of these companies would benefit both from the core sugar business as well as from the byproduct that is ethanol business.
Okay, understood that. Well, thank you so much, Mr. Gorakshakar, for being with us on the show and discussing these several spaces, sectors, and stocks as well. And with that, let's quickly look at how the markets are trading at this point in time. We are almost nearing the end, and we are almost 500 points up on the Sensex, 61,830. That's the level at which the Sensex is trading at. And when you look at the Nifty as well, it's 18,429. That's the print that you're seeing at this point. 160 points up, take about 7% to go for the markets, but a sharp up move right there towards the end. 0.8% of a rise is what you can clearly see. Where is this gain really coming in from? Well, all across the board. Talk about the broader markets, the mid and the small caps. Those are shining brighter too in today's trading action, and all of that pull up has come in the last half an hour of trade. 0.5% uptick for the mid cap and the small cap 100 indices. You can clearly see the line that goes straight up in today's trading action. And both the indices are actually nearing their day's high point and closing towards those levels as well, barring the small cap. Small cap was actually up in the middle of the day as well. The sectors, like we just discussed, we are seeing a whole lot of move on the auto space. That's the ones that leading the, from the top. FMCG space, that's up by 1.5%. Metals are now shining brighter too, 1.4% uptick for that one. Three key sectors, it's the movers, auto, FMCG, metals, clear winners in today's trading action. 0.5% gains for the banking space, PSU, private banks, financial services, and the realty pack as well. And the IT is clearly in the downside right now, almost ending near the day's high, and 42 advances in terms of the Nifty 50 stocks. A great number of stocks from the auto basket really showing uptrend in today's trading action too. And what's more is what we are seeing, I think, the auto sector really clocking in double-digit returns for the third year in a row too. So that's the kind of move that you're really seeing, and we'll have to keep an eye out on what is next. So do stay tuned on to with us for a whole lot of more coverage on stock markets and the way forward from here. Your strategies, the sectors and the stocks that you really need to focus on too. And until then, we'll take a adieu from you, but do stay tuned on to Business Today TV. There'll be a lot of coverage from the world of business and stock markets going forward from here too. And don't forget to subscribe to this channel and stay connected with us through all our other social media platforms as well. Many thanks for tuning in on to this edition.